Hello, Hope. Bill Black here. Just want to go over this total cost analysis with you real quick. So what we have here is taking a look at column one. This is your current loan right here. We're assuming we had a 425 value. And so you got $350,000 as a balance on that loan there, and you got a rate of 3.625. So looking at that, your total payment is $2,413.57. That's broken down by the principal and interest is 1732.99, your property taxes and your hazard insurance, and also that mortgage insurance equals 2413 there. So now we're going to say, okay, what if we used to refinance, we have to increase the loan amount because your fees, you have some title fees there. It's kind of crazy. I think $2,700 or something was the total fees, but have those in there. So let's say 355 is a loan amount now. So we're going to have to cover about $4,500 between closing cost appraisal and all of that stuff. So is it going to be worth it? We can get you down to a 3.25 rate with that loan amount there, and that's about an 83% loan to value based off of 425. And with that, we basically are going to save $259 a month. We say, okay, well, should we pay down credit cards, or what can we do with that $259? Should we pay out? Maybe have some savings. So what I know to do with it the best is put it back into your mortgage or invest in something with a 6% return possibly. So this is basically saying I'm going to keep my output of 2413, and I'm basically at that point then going to have my payment of 2154, but then I'm going to write another check for the savings of $259.16. So my output stays the same. I'm writing a check for 259 and I'm putting it into the reduction payment aisle. I'm putting it right here into the reduction of payment. And so now what's going to happen is right now we currently have 26 years left on the loan on here. So by taking the same amount of output, putting that extra savings back into the reduction payment section, what we get is a 23 and a half year loan now. So we just shaved off for 2.5 years of payments on your just by keeping the same output. So now the next thing, okay, instead of doing putting the money into the walls of the home, regardless if your house is a dollar or $400,000, the value is going to appreciate. And you guys have a really great appreciation. I think it's 5.1% is what I saw out there right now. So that's great. So now we're going to take and say, okay, I got $259. What am I going to do with it? Well, we're going to reinvest it. Where are you going to reinvest it? We're going to put this $259 into an investment. So what that looks like is taking the $259 here, and here's where we put it into the house, and here's where we have a 23 and a half year loan. And now in 15 years, we have 159 versus 189. So we made $30,000 by shaving that down there. But what we're looking at on the investment side, we're going to take that money there, that 259, we're going to put it into this over here into an investment side. So we're going to down here, we're going to put $259.16 in, and a very conservative 6% return. We're going to make $75,000 liquid cash in 15 years. So this is instead of shoved down the walls of the home. So then I say, okay, now we're going to pay off with the investment. As soon as we get this, at any time we can come in and pay the house off, and we have the house paid in 21.5 years. So by doing this, our loan balance is 219, but we have $73,000 or $75,000 to come in to pay that off. I'll show you in another graph where that number is going to go down. The next thing is, let's just do a 25 year and cut you off a year here. What does that do? Well, that actually drops your payment. That gives you $7,400 or $74 a month, because your payment now is $2,339 versus $2,413. Not a huge savings, but we are cutting some time off of your loan already, plus $74. And so that means you're down to a 23 and a half year loan. So your balance of 159 versus 189, another $30,000. So by doing the 25-year loan, or by doing the 30 and paying that extra principal so your output stays the same, both of these are giving us 23 and a half and 23 and a half years. So kind of a good thing there. So I really wanted to be able to show these comparables and maybe run some more numbers, make sure that we got what we need in here, but wanted to get it out before the weekend's over. So have any questions? BillCBlack.com. Really like you to try to get credit score, get an application completed, so I can really run the real numbers here with credit scores. This is a 740. It gets even better at 760 and above. I'm not sure where credit scores are, but that's going to make a big impact. So, very nice chatting with you, and take care. Thank you.